Good evening, friends. Welcome to my channel, Stock Index Edge. I am Nalnakshi Swami here, coming up with the NIFTY intraday trade with the quarters theory. Here, to begin with, always you have to mark the sessions. This is the beginning of the session. Previous day, 24th November, it made a high of 19,832 and a low of 19,760. Okay. See, these are the sessions. First, it was a reversal session, reversal bar continuation. This is the black box was the black box was accumulation phase, and it was manipulation at the time of 1 o'clock. From there, market closed at the level of 19,787. So, when this indicator, quarterly cycles indicator, will mark you when the second session is over, it marks the true daily open. That is the true daily open. It had marked 19,790. 19,794. You can see over there. This will act as guidance for the next day. See, morning, it started moving up, opened above this level. Opened above the, This opened here, 848, and then it started moving downwards. This was the open. For that, today's open was here. And it started moving down, but this level, the true daily opening of the previous day and also low of the previous day, 19,801, which has been plotted previous to previous day, that was the guideline for us. So when market started coming down, these two levels were important. So it came down to the level of 17,800. 800, it penetrated, but it could not go below the true daily opening range of the previous day. So that was the thing. There you could have taken position. Later, accumulation phase. Accumulation phase was within the within the reversal range, and even if this manipulation did not come below, manipulation was above the accumulation phase, and only during the expansion it touched the level around the second session, that is the accumulation session. This indicator will plot to daily opening range. It plotted 19,850. See, after the correction, manipulation, it was making a lower highs, higher lows. Higher lows, so that itself indicated the market can go up. You can see once it started moving above the manipulation level, you can see the big candle over here. And that is ranging from, let me measure this ranging from, let me take the tool. This was totally 48 points range, 15 minutes, and this one is for 46 points. So you could anticipate another 46 points above the level. Let us check 46 plus 46, 80, 94 points we should get. So twice the range, yeah, exactly twice the range it has got, and it has closed over there. Okay, so in this way, let me go to the, say in this case, when price, this was a trap actually. This was a trap going above the previous day high. Previous day high not going above this level, just a trap, and it came down and it came down around 10 o'clock, 10:15. Beginning of the another session, accumulation session, it made a low, but it could not go below these two levels. That is 19,801 and 19,794. Then you could have taken call option. For example, the call option, the range I've already marked, 19,700 call option, it made a low of 154.55. This low was not at all violated, even though there was a lot of whipsaws. You can see around 11:30, it made a low of 157.6. So it stayed in a range. Once it started crossing above the 180, it started moving exponential move. So exponential move, that for the 44 points move, the Nifty gained around 55 points, 63 points. So that's why the correction was, when it was correcting, there was more correction in this when compared to the Nifty. 63 points, and then this ended up 84 points. Though the market gained 94 points, it ended at the 84 points. It made a high of 83 points and it started correction to the level of 41 points. 41 points correction. That was a real correction. Actually, for the 40 points of correction, 44 points of correction, it was an exponential high move. That's why the option premium corrected more. So around 3 p.m., 3:10 p.m., I think, 2:45, it gave a discount to the level of 217. If you would have taken at that level, again you could have made at least minimum momentum trade. You could have got from 217 to 260. So that's how you can take the trade. Let me go to any, to take the example of any uptrend, this one, let us go for not this much. Let us go for IOC trade. IOC. See, IOC, you mark the previous day. This is the boundary. Previous day boundary is this was the boundary. And then let's take out this. See, if you this was the boundary. And the session true day opening was 103.8. 103.8. And it was not like a trap actually. It started from here. The low was, session low was. What is the session low? This is the low of the manipulation, this one. So when price started moving above this, there was an exponential move on the IOC, Indian Oil Corporation. You could have taken this stock, Indian Oil Corporation, you could have held it. See, even on the intraday also, it did not come down to the open. This is the open actually. On the second, this one, it has made an open of, true open of, no, this is the open and this is the low. So it has closed below the 107.8. This is the guidance for the next day. For the next day trade, it is the guidance. So this is how you can take the trade. Let me take any example of, let us go for the Bank Nifty. How you could have traded in Bank Nifty. Nifty Bank, okay. Nifty Bank, let me go to the previous day, 24th boundary. Let me mark the from here to here. So true daily opening previous day, this was the guideline for us and it was the low. See, even though price opened above this, started coming down, it could not touch. Can you see over here? It could not touch the low of the 43,707. Even it could not come to the true daily opening range. Whereas in Nifty, it came down to daily opening range, and the manipulation here, true daily opening range for the next day, these are the two levels, 43,833 and 43,805 are the guidelines for the next. So what you have to do, you have to mark the boundary like this. So you could have taken long position even in the Bank Nifty, even though there was lot of whipsaws after reaching here accumulation, there was manipulation to the downside. The manipulation was downside to go up only. They manipulated to go up. There was an expansion and finally a reversal. It ended at the reversal. Okay, you can see like that. For tomorrow's trade, these two levels are the guidelines for that. Like that, you can hold the position. Suppose if we go to any falling stocks, let me take the Aavas Financial. Aavas Financial, this was the guideline. Previous day range, previous day low. This was the session low, micro session low, and this was the open. See, morning itself it got rejected from this level and it started moving. So it was a continuation of this level. It has continued to the low of the level. Tomorrow, this is the guideline. To daily opening range 1457. Suppose if it starts moving above this, there may be short covering rally in this stock, Aavas Financials. Okay, let us go to another stock. No, Tata Communication will not go for that. Any other stock which are no. SBI card will let us check what it is doing. Actually, SBI card, this is the low. When guideline, now it is the low, 732. It has come to the low. See, these are the levels. It has come down to this level. So it is in a downward trend. We need to watch. Let us check the Bajaj Finance. Bajaj Finance, because it gained. Today it gained. Why it gained? We shall check. See, this was the range. So for you, let me remove the drawings. Okay. This was the range. Okay. So finally, today market ended here and it opened. These were the markings on the 7068 and 7061 were the previous day levels. So it expanded above that, and the accumulation session, it came down to 7061. You can 660.0, just 1 point below that. And later there was manipulation in this session, in the accumulation session and the manipulation, it made an high. Even in the manipulation session, it could not come below this level. So there was a continuously upward movement on the Bajaj Finance. Like that, you can take the trade. See, finally, it has, these are the levels acted as the previous day low on the truly daily open, 7,134. Suppose in coming tomorrow, if it continues, if it starts moving above this level, and these are the two lines. Let me change the color. These are the two guidelines. And if it starts moving above that, and also if it retains this level, these two levels, low 7075 and 7072, these are very important levels for the next. Like that, by using the quarters theory, you can do. So this is a very good indicator. Automatically it plots the quarterly cycles. Even otherwise, if you cannot plot the cycles, I mean, you can do your own 90 minutes. For 90 minutes, you can divide the divide the time cycle, and you can trade. So let me disable this and I'll show you how you can see. From morning 9:15 to 10:30, that is one cycle. Okay, here 10:30 we'll put this one. So you have to find out the range. Okay, this is the range. You have found out the range, and previous day, same 90 minutes, you have to go back. Previous day, 90 minutes means this is 15, 90 minutes, 4, 5 candles here. So this is the range. You mark this and mark that. So this is the range, and today market, this price opened above, and these are the two guidelines, 7036 and 7013. If I enable, if you go back only, you will get the ranges. 7053. Okay, it's not plotting, but you can do your own thing. See, when it started moving above these two, previous day session through daily opening and through 7061, there was a resistance and it started coming down and made a low around 7053. 7053, you can see over here. 7053. But you know the structure. What is the structure? It is making high. See, when you compare this, there is a market shift, right? Market shift. The market was coming down and this was the low. This low, lower high was taken by this high. So then there is a market shift. So you have to wait for the low to low should not be violated. Here in this market, after the market shift, you can see, yeah, let me disable this. See, this was the first candle, break above, and this was the low. So when there is a market shift and retest of the level and holding that level, you can go long. In this way, without any quarterly cycle, time also plays very important. So in this way, you can 90-minute cycle, you can divide yourself and you can find the range and you can trade. Likewise, even you in the NIFTY also, you can do that. So that is how you can hold that. See, you could have made profit actually. You could have made profit in call option, 19,700 call option NIFTY from 154 to 260. That is not a simple thing. It's more than 100 points. Every day you will not get this type. So this was a consolidation breakout. The NIFTY traded in consolidated manner since 2 days. You can see this was the range. This was the range actually. Range came down and it took off this range. Now it has taken off this range, this call option, and it is moving towards this 300. You need to watch what will happen around 300. 300, whether it is going to take out the 300 or whether there will be sell-off. Because option, usually writers will be there. They will not be, these are the writers actually. They have written, and the option premium, they will not let the premium to go beyond that. To almost, we are approaching the expiry, actually monthly expiry. You need to be careful. Okay, friends, thank you very much. Nalinakshi Swami signing off. I hope this will help you to take the trade judiciously. Thank you very much. Please let me know in the comment section whether you are getting any help from this video or not. That will be helpful for me if you do that. Give me the feedback. Thank you very much.